You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
So now I'm going to bring out our two panelists. There were supposed to be three, but Jeff Chiappetta from Schwab tested positive. He's not here. But come on out, Annabelle and Antonio, and we'll talk more.
Are you going to be there?
Yeah. So I guess we will start with having you guys introduce yourselves and explain what your expertise is, and then we'll jump into some questions I have.
All right. So I'm Annabelle Baldwin. I'm the Chief Revenue Officer for SpiderRock. So I'm mostly concerned with bringing revenue in and finding new source of revenue for SpiderRock, which will allow us to build some new, tools and new system automation for the buy side and the institutional clients out there that are trading option, actively.
Good afternoon. I'm Antonio Goncalves. I'm Senior Vice President of Sales and Business Development for Devexperts. Devexperts is a quiet company. I think we may have NDAs with about half of this room and work with a lot of you. We're definitely a quiet company. I define Devexperts' role somewhere in between a priest and a barber. A priest because we help you achieve miracles and sometimes atone for your sins. As a barber because we help you do haircuts or get haircuts. But because we listen to so many of you and we have such a broad spectrum of technology from the exchange side, from the brokerage side, from the educational side, from the data side, from the crypto side, we basically listen to all of you. And again, since I have NDA with about half of the room, I can't reveal any of those, but I can tell you that we do have a very good pulse on the state of the industry.
Okay, awesome, guys. So we have half an hour, and I have a bunch of questions. I'm excited to have some experts to talk to. So, Annabelle, starting with you. So volume's doubled in the last couple of years. Do you see this as a permanent shift? Does it look to you like kind of similar to what we saw with the automation in 2000, following 2000, or is this? Are you concerned basically that this is going to kind of peter out?
So I'm an optimist in nature. So I think the pie will grow, and I think the pie will grow because, mostly because we're getting smarter about doing things. Or providing automation to a lot of clients out there, right? So I remember sitting on this panel. It was a virtual panel last year, and we started the discussion saying, look, this is a retail story. Well, the retail really has retreated for the most part, starting in 2022. We still trade a lot of volume these days, but I think what you're seeing is that the risk has been priced in so far, by the community of professional customers out there, hedge funds, et cetera. It's institutional clients. You see these large swings, and huge flow in index, and at the end of the day, huge gamma, positive and negative gamma swings. But, what is going to happen? There's a lot of market uncertainty going forward. But I think there's also a lot of knowledge and a lot of years of expertise here that is coming to play to collectively all make this pie growing bigger. It might not be a retail story going forward. I think these guys are getting hurt right now, and I think it always takes them a little bit of time to regroup and come back and gain their confidence back. And we'll hear some specialists talk about the retail space. They're far more qualified than I am to talk about this. But on the institutional side, I can tell you that we are all collectively building tools for them to trade options at scale far more efficiently than they ever could before. And we see it on a daily basis at SpiderRock, where those sort of clients, very sophisticated clients, are increasing all the time, whether they are here in the U.S., managing, by the way, billions of dollars and allocating larger sums of money, to trade these actively managed volatility strategies. Here in the U.S., Europe, Asia, it's on the rise. But there's other spaces, right? The whole wealth group is, $25-30 trillion here in the U.S. Traditionally, and they're scattered around, Bank of America, Goldman, J.P. Morgan, Morgan Stanley, Schwab, Fidelity, etc. But traditionally, this space, we're not able to provide these option overlay, because it's difficult to trade options, very technical, difficult instrument to trade, particularly at scales, particularly across thousands of accounts. Operationally, it's very complex. What you see now is automation. You see sub-advisory experts, that are being hired by these IRAs and that are providing these solutions. So yes, I think we're on the rise. I think the using this asset class, whether it's yield enhancement, risk management, managing the volatility of a portfolio at whatever level, are extraordinary tools, and with our expertise to build these automation and these systems for them to actually just put on these trades, I think the pie will grow bigger wherever the market participants are coming from.
Okay. Antonio, how do you feel about the volume?
I'm sorry, could you...
Do you think option volume will continue to kind of climb higher, and what if so,
yes,
where's it going to come from?
I think so. And, if you remember that there was a movie, The Planet of the Apes, and then there was a sequel called The Rise of the Apes, and now it's The Rise of the Apps. And what happened is there are apps coming into the market. We get people knock at the door, startups that are completely automating the options trading. And that is really changing the state of the industry, especially for anybody who is older than 25, because you're seeing this new generation that actually doesn't even need to learn it. It just has an app that does absolutely everything and automates absolutely everything for you. This enables not only the expansion of the options U.S. retail business, but allows an international crowd in countries like Brazil and Chile, etc., where there is no options culture whatsoever, but enables that retail in those countries to actually use those apps and actually trade options. The fact that these apps combine the educational with the complete tool automation and data backtesting and rebalancing, and allows even the creation not only of portfolios but of indices, is a staggering dynamic in the market. So yes, it is inevitable that will grow, and it comes from the rise of the apps. You're seeing this rise of the apps. It's funny, we were locked up for 2 years, and when the masks came down, it became very hard to recognize what the heck the industry is. So when you have a panel called the State of the Industry, my first question is, what industry are we talking about? If you look at the last 2.5 years, my goodness, we saw Robinhood emerge, Robinhood go down, the zero commission catastrophe that brought, some dramatic shifts. And now you're seeing all sorts of startups and investments and venture capital investments incoming after that generation. And that is a mobile device-based generation with very strong inclination for games. I recommend you, there's some things absolutely extraordinary out there, and some of them I've seen in the past few weeks, but For instance, they're able now to create an index on music genres and actually able to trade options and futures on it. And that's being approved by the CFTC and coming out very soon. So you're seeing not only the rise in the classic options market, but you're going to see a rise in proprietary, unique products that are so creative and so different that will greatly expand what we see as the industry, which we are very focused. We've been very focused on this equity option, ETF option, the classic financial product industry. And that's about to dramatically change. Mm-hmm. When you see an option on an index music on jazz and on, could be on a movie genre, for instance, with which, for instance, companies like Spotify and others can hedge their own risk that they have paying authors. So it opens up the whole industry to an incredible new type of asset classes that we haven't even considered. So I think you'll have more work next year, Andrew, with the slides.
It sounds like it. Do you think that it's super interesting and that the strike proliferation and product proliferation slide, right? The one thing Jeff had sent me notes before he COVID'd out, and one of them was too many contracts, too many options, too many listings. And this is Schwab's perspective. And there I think it's pretty safe to say there are. I mean, and do you think that if we're going into a world where people want to trade mobile, right? They want to pull up. You're not going to look at, 8,000 Apple contracts on a phone or an iPad, right? You need the system to do some work for you so that you can be like, okay, I don't know about the 181 strike versus the 183 strike. Do you think the industry's kind of, the industry's still like, well, we're going to list all these things and we're going to make sure we have enough strikes and expirations and add more if that's what people are trading. But it sounds like what you're saying is that the apps, they don't give a hoot about us having, more and more selection may not be actually positive.
It's a chaotic, complex, adaptive system, which means, and very fueled by sentiment, which was always the case in the financial markets, was always the case, but now is very driven by a generation exceptionally attuned to social media and sentiment. Actually, most of these apps are social media. Are social media platforms where they, and we've seen that, with some of the things that have happened last year with GameStop, etc. So it's like you say in French, la foule. They all follow and, things happen. So that puts the industry, or let's say the classic players of the industry, in sort of a reactive mode. Because basically, yes, you are dealing with an unstoppable monster that is very difficult to control. So the critical issue is how do you monetize it and and the question of control is very important. Yes, there shall be control. And there are a few, if you want to discuss that, there are a few ways to control it, and I'm sure I know the regulators are exceptionally attuned to this. But let me, Annabelle, has some comments.
Well, I mean, right, and I'm thinking a more traditional trading system, right? Because those are still prevalent as well, at least on the institutional side. What I think you are seeing is, a better analytic layer that is embedded into these systems that, instead of seeing the full chain of option series, there's some intelligence that are built in to indicate what trades or what based on historical pattern, to actually lead perhaps a client toward perhaps a better execution experience. Whether it's going to be listed on the screen or what's happening off screen, right? I think you're going to, and we're certainly working on these sort of solutions at SpiderRock, but, we want to create, and you will, we're not the only one, we will create a layer, sort of a normalized layer that allows an institution client to be able to enter a trade, whether it's for 5 contracts or 1,000, with an analytical layer that will indicate, is it better to put this trade on the screen, or is it better to do it off screen via an auction mechanism, or via an RFQ mechanism? And you've got the liquidity providing liquidity that will electronically answer to this. So you also will start seeing these sort of systems that are making it faster, simpler, right, with an analytical layer that is very robust.
So does that mean that in certain platforms or certain kinds of traders could basically exist without even knowing what's under the hood in terms of, I'm thinking of like some of these crypto sites where you connect your wallet and click a button and it says, okay, you're earning 19%, and you don't know what you're earning it, how you're earning it, but under the hood maybe they're overriding your position. Do you think that kind of model could play over into the listed options space?
I'm not sure. I'm just saying that I think there's going to be a system that will make this whole fragmented market, and you're talking about 17 exchanges here, right? And this, massive amount, 1.5 million at option series, sort of irrelevant. Because, you're going to have systems that will abstract this complexity. And we have to absolutely get there as an industry to attract, the Generation Z here that is totally expecting these sort of things, right? They are expecting fast, simple, and by the way, I want expertise, and I'm quoting Oleg here. That was awesome, by the way. And I want expertise when I need it, right? All this at their fingertips. And so that's what we're building.
That's interesting. So, and I remember running around 5 years ago talking to somebody about some new exchange that was popping up that was going to get launched. Oh, are you guys getting ready for, I don't know if it was Pearl or C2? And they said, we couldn't care less. We don't even know how many exchanges are there. And this was at a bank.
Right.
Like, because the routing system takes care of it, I don't even have to think about it. And that's, that illusion of, okay, well, we know we have 16 exchanges, and that's very important to kind of, most of the people in this room, but the customer shouldn't care. And that I think is, and I do think technology is kind of, in most cases, you don't think about which exchange you're going to send your order to if you're going to make a small trade. I think that on the bigger institutional side, it becomes it's a much more conscious decision. But I want to get to market data and innovations and trends, because at Cboe, Data and Access Solutions, which is my department, we are responsible for market data and some new kind of proprietary data sets, things like the open-close files that have been around for at least 8 or 9 years. That's a step away from just a big opera feed that everybody, subscribes to and uses for all purposes. Antonio, what kind of market data specific innovations or trends do you kind of see out there in your travels?
Yeah, we're seeing an enormous rise in data analytics services for retail. So, and by the way, there's some absolutely incredible people in this audience that we just met with one of them just about an hour ago. There's some incredible people right here that are able to present you incredible visualization of data tool sets. So you're seeing a rise in that. I see that the classic model of classic exchanges of rising the data fees and very frankly, preventing what I call the democratization of the access to the data, meaning the access of the individual retail trader to the individual instrument that he trades. I think that model will inevitably change. And that's why the Chainlink and the Pith networks of the world were going to be so important, because they are going to effectively change that paradigm and allow for a very distributed and independent way of each end consumer buy the individual instrument with everybody making money in the process. So I think that is a fundamental shift that we should have gotten to a long time ago, but it's because of where we came from in the exchange side. Because of where we came from, it's a paradigm that is almost impossible to break from day to night, because the exchanges would lose a tremendous amount of revenue that they have in the way they monetize the data today. But the shift is there. It's coming. And ultimately, in 10 years, every individual consumer will have access to every individual instrument that they need to consume. Yes. And they pay a price for that instrument. So I think we're going to see a gradual evolution to that. And we're going to see more and more and more visualization tools that the retail can pay very simple $30, $40 per login, where he access all the depth feeds, all the depth of market feeds that cost $5,000, $10,000 a month. So you're already seeing that today. And Cboe actually participates in some of those apps like Bookmap and others. So that has become more and more popular. So I'll leave it there. I have a few other, but I'll leave it there in regards of data. I don't know if Annabelle...
I echo what you're saying. We have a market data entity as well at SpiderRock, and we see the rise of it. Particularly interesting, what's interesting is the analytics, the derived data. What the institutional crowd is getting from that option implied data, whether it's volatility or Greeks or whatever, they extract signals out of that. But also, you're right. I mean, the retail space is demanding it, and the delivery mechanism to bring this data to people are getting better and better. Easier, faster. It's a democratization of that product as well. Yes.
Gotcha. I got a bunch of things more. We're not going to get to them all. One topic I want to know what you guys think about is this kind of shrinking products, this minification, which is one of the, it's come along with retail, although, you could say that, if the CME's been shrinking multipliers for some of their products, that's not really so much a retail crowd. So, Cboe's got Nanos, which is a 1 multiplier contract that we just launched. I've traded it. You all should trade it. It's got some challenges, but do you see that trend continuing? I mean, you don't split an index, right? We're going to split Google. We're going to split Amazon. 20 for 1 here and there. But what about the rest of the products? Do you see that kind of trend? Do you see that trend working out, I guess, is the real question.
I mean, I can't really talk about retail, but I think for the wealth advisors, if we start really seeing the adoption, and the adoption of these option overlay on thousands of small retail accounts within IRAs, I think it is important for them, to have access to these smaller contracts to be able to allocate. Correct.
Gotcha.
And Flex, I think the rise of the Flex volume is also driven by that space. So all this is going to be important, yes. I don't know about Nanos. It's expensive.
We're working on that. Antonio, any comments?
I think you just NFT everything and sell it in 1 million pieces each. That's it. I think that's the
fractional options.
Yes.
Gotcha. Okay. I have a kind of a high-level question for both of you, and that is, what's the most significant change you've seen in your career in terms of, kind of this industry? Maybe I should have...
Systems. I mean... Yeah. Trading options at scale particularly is extraordinarily complex. Managing risk, it's complicated, but that's what makes it cool. That's what makes it great. And the application to use options, are outstanding, right? And I think trading systems that will make this easier, that will buffer, the complexity of these instruments. I'm excited about it because I think there's such a vast, array of market participants that can benefit from this asset class. It's very exciting. And I think technology is driving this. And we all expert here, and we should put our expertise into making sure that this layer, what we present, the way that we present this industry is palatable for a much broader set of clients, which we are working on. That's very exciting.
Gotcha. So you want a broad idea of a couple of things that are shockingly revolutionary.
Yes.
Okay.
Right.
So I think the most shocking thing that I have seen in the past 2 years was not the emergence of Robinhood or the zero commission paradigm shift or even the rise of crypto. I think the most shocking thing was when FTX bought IEX. And you look at the valuation of these companies, and you realize they can acquire pretty much anything they want. So I think the biggest thing coming is called the hybrid exchange. I don't personally think the world is going crypto, but I think we're going to see classic exchanges such as yours acquiring, transforming into an infrastructure model where they still have the classic exchange, and then via APIs and connections and ancillary systems and custodians and wallets, etc., they effectively link to the other, bridge to that other world. So the infrastructure and the shift in the exchange side is going to be the hybridization of the exchange, without a doubt. That's already happening. And then at the retail level is the rise, again, of the apps, the apps, which is the rise of the active participant.
Yes.
And the increased gamification of the whole game. It's a game. It's a game. The tool just tells you yes or no. It becomes very binary, very instantaneous. And that's not for people like us, very frankly, that are kind of experienced. I always say, the big thing in crypto is you're a hodler. I mean, I'm a classic investor. As soon as if I had bought Bitcoin at $1, I would have sold it at $2. I would never would have waited. So it's a very different mindset, and that's a big paradigm shift. But I think these are the big two, and they're inescapable.
That's interesting. I mean, one of the I'm not a crypto expert by any stretch. However, I do love the ideas that you can pick up, seeing what is being developed in that space, and one of the and I guess and I had a question on this. So, and one of the things is crypto's 24/7, and so are crypto options. There's no concept of the end of a day. There's no close.
No.
It just keeps on rolling. Do you think that so Cboe has a curb session for SPX now, which is an extra half hour. We have overnight session that starts at, I believe, 8 p.m. and goes all the way pretty much until they open the next day. So it's almost 24-hour trading for that product. Do you see that, and Robinhood announced a 2-hour extended hours session of their own. And so do you see the industry moving towards 24-hour stock and option trading? Do you think we could ever get there? Annabelle, start.
Yeah, 100%. I mean, look, we have clients around the globe, right? They want to trade. While they're awake. It would be
on a Sunday they want to trade?
Right? Yeah.
Yeah.
Yes, absolutely. So, yeah, we're going to go there in the next few years.
Henry, the answer is yes, and you're going to see that via intercontinental alliances.
All right, so no vacations on the weekends.
Well.
I have a question about education. Do you think that the industry is meeting the needs? We're talking about, and probably, we're all professionals. I'm old, so I think kind of like you do, like, oh, you know what? If my dad says, what should I do? I'm like, okay, buy some stock you like, sell calls every, month, roll them, pick your strike. It's very conservative. We see that a lot of the retail activity is not conservative at all. And, I try not to judge them and say, oh, these people are freaking nuts, because in certain situations they were making a heck of a lot more money than I was. But do you guys feel like the educational side of the business, whether it's offered from brokers or OIC, is sufficient, or is it kind of a free for all where whatever you see on Reddit must be the good action to take?
It feels antiquated to me. We need to find better ways to reach out these, people behind that are, they're expecting experts when they need it. Again, right? To quote Equinix, it's very true. It's like they don't want to be bothered by classic textbooks or reading. They just want it at their fingertip, right? Or go to a conference to get educated. They just don't. So we need to find better ways to reach out to create again, educational bots within those systems, so that they can actually just get to the thing that they're looking for fast. And it feels the whole educational effort of this industry feels a little antiquated to me. I think it needs to ramp up.
I have to tread very carefully on this one because Devexperts is a priest at some of the most successful educational platforms, and some of them are in the room, I believe, as well. But education is essential, and I would urge anyone who is successful with an educational platform in the United States to actually expand abroad, especially in Latin America, where they're desperately trying to create options markets. But part of me also thinks that the rise of that artificial intelligence, data-driven app will actually completely eliminate the need for education, because all you need is to push the yes button or the no button and trust the app. That's it. So the education will not be necessary. It's like you don't need to learn arithmetics anymore. You just have a calculator.
So you won't need to learn how to drive a car if every car is
driving. You won't need how to
so.
drive a car. That's it. So
interesting. So
that's my view.
The whole question might go away with the rise of the machines.
Yeah.
Awesome. Well, we have a couple minutes. Is there anything kind of on your top of mind for both of you that you think is something we really all need to kind of work on that's not great, or something that's great that we should really make sure that we focus on?
No, I just wanted to say that I feel very fortunate to have been part of this industry for the past 25 years. I think we are we have lived 2 years that we're still trying to digest or understand what happened to the humankind, honestly. This industry has thrived during 2 really hard years that I think has created a drastic societal and behavioral shift. We're so fortunate, honestly. And, I look at the young generation. I have a 20 years old and a 16 years old. The 20 years old didn't do so well, transitioning from high school to college during COVID. Let's just celebrate what we have as a business here, because there's just a lot of folks that have not been as lucky as we have. That's all I want to say here.
Henry, I have a final statement to make, which is, it's not going to answer your particular question, but I wanted to tell you this. The state of the industry is also the state of the people, their health, their well-being, and some of the most talented people in this industry, software developers, IT people, business analysts, software architects, etc., they're all over the world. Mm-hmm. And some of them right now are either fleeing bombs or are fleeing a totalitarian regime. And these people are being welcomed all over the world, in Turkey, in Georgia, in Portugal, in Germany, in Bulgaria. And they have been too part of the backbone of this industry. And you know what? We should welcome them as well as a country, because they can make a decisive part of the future of this industry because they are amongst the most qualified, intelligent people in the world. That's it.
Well, thank you guys, and I look forward to the rest of the conference.
Very good.
Thank
Thank
you.
you.
Thank you.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.